My dear friends, welcome to Rajashekar classes. This is lecture number 11. In this lecture, we will try to understand USA stocks versus Indian stocks. First one is market overview. The difference in size and global influence between US and Indian stock markets is significant due to factors like market capitalization, the depth of the markets. Just see the depth of the markets. In the case of USA, it has got 40 trillion dollars, whereas in India 4 trillion dollars. That's the depth of the market. The US stock markets is significantly larger and more influential globally than Indian stock market, while the Indian market has immense growth potential and importance within the emerging market sphere. It operates on much smaller scale and has a limited direct global influence compared to the US market. What are the key indices? In the case of USA, we have seen S&P 500, Dow Jones, Nasdaq, Composite. In India, Nifty 50 and Sensex. Performance comparisons for last 5 years. S&P 500 is 10% CAGR and Nifty is 12% CAGR. The performance comparison between the S&P 500 and Nifty 50 over the last 5 years, with the S&P 500 achieving an approximate compound annual growth rate, that is CAGR of 10%, and Nifty 50 achieving 12% CAGR. The higher CAGR of the Nifty 50 compared to the S&P 500 reflects the growth potential of an emerging markets like India relative to the maturity of the US stock market. However, returns for international investors must consider factors like currency movements, risk appetite and investment objectives. If you consider economic context, in the case of economic context, we have GDP. In the case of USA, we have GDP $27 trillion, India $4 trillion, growth rate USA 2% and India 6%, inflation USA 3%, India 4.5%. Indian stocks have high growth, high risk, attractive for long-term investors looking for emerging market exposure. US stocks stable growth, lower risk, suited for diversification and steady returns. Indian stocks are attractive for higher growth potential but come with higher risk and inflationary pressures. US stocks offer stability and more moderate growth but are less prone to the rapid growth and volatility seen in emerging markets like India. Investors seeking less risk and long-term steady returns may favor US stocks, while those willing to accept more volatility may prefer Indian stocks for potentially higher returns. In the context of sector composition, sector weightage: USA technology 10-27%, healthcare 14%, financials 11%, whereas in India financials 37%, technology 15%, consumer goods 10%. Highlight the tech-heavy nature of US stock market and dominance of financials in India. That's what that sector weightage says. If you consider investment opportunities, in the case of USA, you have stable returns, diversified global companies, access to innovation-driven sectors. In India, high growth emerging markets, expanding middle class and urbanization. Both countries offer attractive investment opportunities, but the choice depends on the investor's risk tolerance and time horizon and sector preferences. Investment opportunities in the USA and India vary significantly due to difference in economic structures, growth prospects and market maturity. Compare the stability of US markets with growth potential of Indian markets. If you consider risks and challenges, in the case of USA, have market saturation, geopolitical risk, economic slowdown risk, whereas in the case of India, regulatory challenges, currency volatility, political risks. The risk associated with stock market investment differs significantly between the India and US markets, largely due to difference in market maturity, regulatory frameworks, liquidity, investor behavior, and economic factors. Investors in the Indian markets face higher volatility, liquidity, and governance risks, often amplified by developing regulatory systems and economic vulnerabilities. In contrast, US markets provides a more stable and predictable investment environment, but is not immune to systematic risks such as global financial crisis or sector bubbles. The choice of market depends on an investor risk tolerance, investment goals, and understanding of market dynamics. Investor profiles: who should invest? USA ideal for long-term risk-averse investors. Whereas in India suitable for growth-seeking and risk-tolerance investors. I can conclude that USA is good for its stability, global innovation. India is growth, emerging opportunities, diversification benefits from investors in both. I request you to go through these points. That's what we are saying. USA is known for stability and global innovation. India is growth and emerging opportunities. Just see diversification benefits from investors in both cases. Thank you very much.